super months. I have a monthly chart of the calendar year of the S&P 500, and this is the year. And I'm going to just kind of cover a little bit of stuff because what has happened is we've made so far, we have a narrow, very narrow monthly trend so far compared to some of these in the year 2016. It was on its deathbed. They were below the 10-month and the 20-month moving average. They popped it back in. They started to buy the dip. The red line is the 20-month and the blue line is the 10-month, and that's a public format. And now, when we close the month of August, if this is narrow range and daily charts and other charts would show that it could possibly be a reversal monthly doji in public terms for market makers. Here's a daily chart of the S&P 500 right now, and the 20-day is the red line and the blue is the 10-day, and we can clearly see that this is that top. And yes, we did have a reversal, but you see, we haven't had any real hardcore selling other than we have a 3-day range that we would like to talk about. Okay, and if you're really interested, stick around and we'll tell you what it is momentarily on the daily chart. As we can see, that's where the reversals were. Now, we trade options, and we trade the S&P 500 index options, and we make a lot of money. And, you know, right now we're trading the week. We've done very well of the $2,200 put, and we have 826. And then the last day of the calendar year, August 31st. Goodbye, August 31st. How much money am I going to make in these calls and these put options? And what is my best move for a beginner or advanced, for that matter? So, beginners, you're going to do extremely well. Why? Because when I give the order to buy, you're going to buy it, and then you're going to sell it, and you're going to make it easy. Versus somebody that's been around a long time, they're going to try to make it complicated. Here we have an 826. It's a weekly put option on the S&P 500, and we've been buying that consistently. And I want you guys to know that this is a 2200 put chart. And for the people, if you're brand new, hey, we'd love to have you because you're going to get taught the right way as a market maker. We're a market making company, and we make markets between the public. We do the very short-term division and the longer-term division. So we are just going to say one thing for sure, that today's action, we had bought and sold this Friday, and it popped up and we sold it around 2270, I think it was. The 2200 put is a weekly, and we have sold into the move, and then we bought another contract there at $18. So when we get into very sophisticated put charts, we have so many different algorithms that we've designed, and when we're buying these put options, it's for a trade, and that's what it is. We don't have any big reversal days. This is, again, the $2,200 put. I'm also going to throw in here the 2195 put chart. You people that want to trade options, what do you make your decisions on? Retail crap? Come on. This is a put chart. It's a 2195 put chart that people don't use, haven't never seen, and for the other part of it, wow, man, I want to throw my money out there. And what are you basing your information on? You're basing it on retail stuff. And we're going to go over here and we're going to take a look at this 2175 put weekly S&P 500 index option, how to make intraday money. they were over here 4 days ago. These options were 1780. And this is at the 2175 on the S&P, and this is where that money is rolling. When we take a look at the 2190 put side, once again, they all have something in common. They're deflated in price. When they get up here, whether it's a call or put, this is a 2190 put chart on the S&P 500, and it has all of the values. New people, come on. These contracts were up here at $26 on 8/17, and this is the 2190, and we'll be trading that too. And like I said, they all have something in common. Is the common denominator is deflated in value. It is a 2195 put chart. We can see clearly that the narrow trading days on the S&P have been narrow, and we do know that. And it closed at 2182. So here's the 2200 put, and once again another 2200 put that we're looking at trading. Of course, it's more money, but it too is an August 31 weekly contract, and we got until 8/31. And we're going to be buying this because we have plenty of time to hold this one overnight, and then we can trade and get entries on some of the other ones. But that one there, that one there is going to be a very good one. And what we're basically doing is that the call side of the market, which we're going to show a call, and it's a 122 call, 826. Now, I'm going to throw this in the chart, and here we go, man. This is, and here's exactly what I'm talking about. Here's exactly what I'm talking about. The call contracts got inflated way super higher, and like I said, $2,200 call. It's out of the money. The low today was $1.05. Now, we buy this because I'll tell you why. If they want to pop this sucker, well, we're in it because the S&P gaps up in the morning or down. So being a master and finding the opposite end at a deflated value is how we hedge our risk. You heard it. You heard me. Here's a 2195 call, man. Look at that sucker. It's down there today at $1.85. Listen, as a market maker, these calls had to come down, and the put side of the market had to go up. So when we are talking about a huge, great, big trade, we're going to be buying the heck out of that thing tomorrow. And we can even go to a 2185 call on the S&P on a weekly 826, and the calls are cheap. The range is 3.3. I'll put the value of the 2185 call right here. And once again, this is the call chart on the S&P 500 index. You really want to make some super money? Then you get in here right now. You get in here right now and watch what we do. We're a market making firm. There it is. So we're looking at the call side. So when we own the $2,200 puts and we hit a bottom and the calls are deflated, we're going to buy that side of the market just for gap open up scenarios. S&P 500 today, it cleared the resistance levels from the intraday. We hit the 20-day simple moving average on this S&P 500 right here, and that's acting as support over in here. This is where we dropped to, and then they popped it. So S&P 500, this is a very detail orientated actual entries and exits. S&P 500 index options, weekly, monthly, quarterly.